Great.
Good morning, everyone. I'm Vince Lancy, and today's market rundown, we're going to focus on the goings-on in France, which started last night, and the manifestation of that in gold. And we also have in premium a very nice mid-year wealth outlook from Citibank. I'll tell you the pros and cons, there's always cons with me, of that in a second. First, let's start with the markets themselves, and we'll focus on Europe in a minute. The dollar is up 30 and change at 105.54. The 10-year is 4.20, down 4 basis points. The S&P 500 is down 30 handles, near the all-time highs, but affected by what's going on in Europe. The VIX is 1329, up 1.35 or 11%. Gold is 23.27, up $26. This is all in sympathy with Europe, or France specifically. Silver 29.20, up 25 cents. Copper 447 on the plus side of unchanged. WTI up 81 cents. That's not necessarily Europe. There is some escalation in the Middle East as well. Natural gas 284, up 5 cents. That's daily volatility for natural gas. Bitcoin is up 75, not really benefiting much from this little chaos we see here. Ethereum is 3507. Not benefiting much either. Platinum and palladium, let's see. Upside down for them today. Palladium is up 14 at 897, and platinum is 950, up $4. Gold, silver 79, continues to strengthen towards that trend line, and grains are all down. Wheat down the most at 627.7, down 4. Corn down a penny at 451 and change. And soybeans 11.77, down 5 cents. Okay, let's get to it. Oh, that's the bonus. Front page, France Chaos City Wealth Outlook. I'll come up with something more snazzy later on. The focus today is going to be on what's happening right now in France and Europe, and will continue to happen all throughout the day today. And God willing, you'll read about it in the mainstream media in anywhere from 3 days to a week. But it's happening right now, and it's affecting our markets. The second thing we're going to talk about is it's the mid-year for investments. And because it's the mid-year for investments, you get a kind of touching base. And you also get reallocations. And some of those reallocations are going into gold, some are going into silver, some are going into oil. All right. Front page, gold's path forward. This was a special piece that I did, a podcast for premium subscribers describing what could happen, what should happen, what is likely to happen for the next 2 to 6 months based on the last 6 months, actually the last, call it 4 months. All right. Pepe Escobar, he's got a piece out about the BRICS and Enbridge, and mind you, he's coming at it from a Russian-centric point of view, but he's not inaccurate. Saudi Arabia's petrodollar exit, a global finance paradigm shift, things that we and other people like us have covered for months, but the mainstream media is picking up on it. So I guess things are changing a little bit. Anyway, with a lot of content as usual. Okay, let's start with this. Actually, let me put up my global equities so you can watch that. Here, very quickly. You want to find the SX, the SX5 or the SX7. There it is, down 2%. That's European stocks. Okay, that's the daily. All right, so why is this happening? What does it mean? Okay. This is Reuters. French markets endured another brutal sell-off on Friday as political uncertainty unleashed the biggest weekly jump in the premium investors' demand to hold French government debt since 2011, and bank stocks tumbled. France's finance minister, Bruno Le Maire, warned the Eurozone's second biggest economy faced the risk of a financial crisis if the far right were to win parliamentary elections in the coming weeks. Marine Le Pen's Eurosceptic National Rally, RN, is leading in opinion polls following President Emmanuel Macron's surprise decision at the weekend to call a snap election. Le Pen's party is calling for a lowering of the retirement age cuts in energy prices, increased public spending, and a protectionist France first economic policy approach. I have second and third levels to talk about this already, but let's just try and stay with the first level. A lack of confidence in government has put France's
the proper way to do a garage floor so it can last for years.
France's political uncertainty is a manifestation of Euroscepticism in general. So Europe is the Euro, or the European ideological cohesiveness, that is the Klaus faction, is breaking apart. Nationalism is reasserting itself as the complexity of the European continent breaks down into more simple, more manageable risks. Every man is on his own now, so to speak. Now, in France, that's manifesting with a political right-wing, conservative, populist movement. It's manifesting this way everywhere, but it's similar to what's going on with Trump here. But in France, it's more powerful because France is the second biggest economy in the euro, and the euro isn't really money. Sorry, it isn't. It doesn't have any fiscal bonds behind it, and as a result of that, sentiment matters more than law. And if sentiment is weak, then the euro could really get damaged. I'll throw something else at you won't hear anywhere else unless you listen to Russell Napier. Japan factors into this as well. Not today, but they will. Japan is the biggest holder of U.S. bonds that sells them. So, except for, China. What's the second biggest offshore holding in Japan? France. If Japan's currency weakens, that's bad for France. If it's bad for France, it's bad for Europe. France is a mess, and it has been a mess, but now it's just coming to the surface. Okay, so what does this mean? Well, if you look throughout history and you're a gold and silver person, actually, silver is the funner one here, but it's not going to happen right away. What happens is Europe is very gold-centric historically. They have the history of it. And so if the euro is not going to work, yeah, they're going to buy dollars, but they're also going to buy gold. When Brexit happened, boom, gold exploded. And then silver exploded even more. That was fun. 2016, 2017. So when you look at all the markets, not just the euro markets, and you see the dollar up and gold up strong, there are one of two things that can happen. One, Middle East crisis, which is potentially happening. It's been happening for a while. And two, European financial crisis. Grexit, Brexit, what do you want to call this? Frexit? You're going to start hearing that word now. So Europe is unsure, and so they're buying gold. And things like this make gold get remonetized faster. And things like this make silver lag and then skyrocket. That's my opinion. But this is a big deal. It's a big deal because it's France, and it'll spread to other countries. Now, if you're a tape watcher, watch how the U.S. reacts to this. I don't know how we're going to react to it, but we will react to it in some way, shape, or form. Very important, very significant for the continent, the European continent. Okay, moving on. And the obvious move in gold gives you an idea of what we're talking about here. Let's go back to the stock markets. Where are they? There we go. All right. Take a quick look at gold, right? Man, it's not going under that line. I'm really suspicious if he's back. He might be back. All right, moving on. At mid-year, you get a lot of reports from banks to high net worth individuals and institutional investors, and those reports cover, it's kind of like a report card and an outlook. And from there, they adjust portfolios. And usually you're going to get money put into certain markets and taken out of certain markets. And although it's not a big allocation, I think it's always good reading because you'll get a little bit more frankness there. And most of them are just kind of glossy things. And Citibank's is glossy as well. But they touch on all the aspects that matters. You're going to get topics out of this. And I think it's very good. There's a nice liberal section on gold, nothing on silver, but okay. So here we go. Our outlook, renewed growth, new challenges. Our outlook, read that. That's editorial if you want to. Portfolio views, right? Nice section on commodities. I believe they're recommending clients to put more money into gold, some money into oil, and they're looking for big plays on electricity and AI infrastructure to put money into power companies and what have you. All right, so you have your portfolio views. That's their opinion on what's going on. And I just gave you what their opinion is, right? Unstoppable trends, that's the thematic thing. AI propelled digitization, I'll read it for you if it's too small. The race for picks and shovels, that's a comment on chips, right? Which chips should go up next? I'm not so crazy about that stuff now as a person who owns them. Cleaner and smarter, how AI can help fuel the energy transition. Look, that's a big wrapping paper for databases. Oh, all right. That's a big wrapping paper for utilities. That's a big, bow to buy things that produce energy, not just oil. Healthcare's improved prognosis. Didn't look at that yet. Intensifying polarization, navigating risks and potential opportunities. Right? They're bringing the geopolitical or geoeconomic into the investing sphere. Regional previews. A Chinese comeback could further boost the region, of course. Europe from necessary conditions to gradual recovery. Well, maybe, but not today. Latin America, lackluster growth to persist. Maybe. I don't know about that. North America, recovering profits, delayed rate cuts. Maybe. I'm not so sure about that. But I'll give you a little bit of I'll give you an excerpt of what they say about gold. They say stuff that we've been saying for a while, but these are good places to start. Okay. So what you got is lately gold has appreciated despite rising U.S. real interest rates. Historically, the metal has moved in the opposite direction to inflation-adjusted rates. But since the U.S. Federal Reserve began tightening monetary policy in March 2022, the gold price is up 23%. What is behind this breakdown and its relationship with real rates, which was last seen in 2006 when gold was in the middle stages of a bull run? There's two nice charts on that. China's foreign exchange reserves versus gold price. And central bank gold purchases have been above the decade's average. And there's other charts in there as well. We believe the answer lies partly in unusually large central bank purchases of the precious metal, figures 2 and 3, which I just showed you. Yeah, they're buying the gold. They want the gold, right? They want the gold. Foreign reserve data show a 35.6 billion jump in China's official gold holdings over the past year, alongside some selling of U.S. treasuries. Some selling, a lot of selling. Another source of demand has been from Asian retail investors. They're not the only guys buying it. Stop making them to be that big. But this is a very good report. My snide remarks aside, it's a very good report, and it's what affluent individuals are going to be looking at, this sort of thing. Both these buying trends may continue, but we would not simply assume that they will. Typo on my part. Both these trends will continue. How's that? Maybe they're not buying in China this month, but they're buying in India. They're buying in Turkey. You may not see the buying in China. See, people are focusing on the fucking micro here. It's not who's buying, it's who's not buying. They will be buying. All right. There's the report. I think I just touched on that. And data on deck today, 10 a.m. consumer sentiment. There's something before that, but I don't think it's that important. Maybe it's housing. That would be important. Anyway, so there you go. There's the wealth outlook and premium. Let's take a quick look at the markets. I made a comment about gold. I want to make it again. Remember, identified a buyer, came back. Market gave up. Buyer comes back. I'm not sure. It could be a secondary buyer. Goes up again. I figured after this day yesterday, I figured we're gonna test that line again. We didn't. So you can say, well, that's because of France. If you're a gold bear, yeah, there's always going to be a problem now. There's always going to be a problem. Right? You can't put out the fires fast enough. And that's why if you're a person who doesn't normally buy gold, you just say, screw it, just buy some gold. I can't really deal with this nonstop mini crisis that we're going through. Have a great weekend. I'm Vince.